quite a week that we've had. The earnings call happened on Wednesday last week. And as I review what happened to the stock here, we see that it was at 252 or Wednesday before the earnings call. And by the time the earnings call ended, it fell to 242. And of course, the next day it fell all the way to 225. Now it fell again yesterday, Monday, but it recovered again. So, this is the 3-day rule. So I think the main topic today is different people have different investing styles and different philosophies. And some of us kind of reacted differently to this earnings call. We could talk about the different approaches. This is not investment advice, but it'd be very interesting to hear how different people are thinking about what happened last week. So why don't we start with you guys? Xander, do you want to start this off and tell us how you think of Tesla and how you reacted to the earnings call?
How I think about it? Yeah, I was very surprised that we went full doom and gloom. But I was prepared for it. I've never sold shares before, but going into earnings, I trimmed some a little bit above 250, and then I started selling some cash covered puts, and then I even bought some puts, which is a big taboo. You're not supposed to do that, or they say that you're not supposed to do that. So I kind of changed my way of approaching Tesla, right? So every penny that would come in, I would ship immediately to the brokerage and buy stock. And then that's evolved to trimming off, well, first of all, getting myself out of margin was my top priority before earnings. So I've had last year I had margin calls, but I kept myself in margin, all the way up. And then, but now it's kind of come time listening to Elon's warnings that it's probably wise to be able to pull the margin chute when and if we get to some ridiculously lower levels. So I've been watching the technicals. I had some serious takeaways, which, maybe we'll want to talk about the technicals of Tesla a little later. You kind of guide me on, I don't want to go on a long rant. But overall, like I learned some lessons in 2010. Even I'll give you an example. Like we had that 415, and then you had, in January of 22, you had like a high of 380 or a high of 400, and then it was a high of like 385. But then it didn't break through. So then when we got down to this, 100, and now we kind of came back up and we started hitting that trend line multiple times, but not getting through. So I decided that on the third time it doesn't get through, and as we start dropping, I'm going to cut and free up some cash. So again, not financial advice. This is one of those things that just I'm trying to learn as an investor, but also since I do a little bit of trading around the edges, I kind of set that rule for myself that I would find a way to be able to buy the dip, because what hurt the most was knowing that 101 was such a deal and I knew it would recover. I didn't have any cash to be able to buy the dip. So I kind of did that. I don't know what you guys think about it, but I love feedback and your thoughts.
Yeah. Okay. So Xander, you are a long-term investor in Tesla, but you also like to play kind of the options. And so I just remind folks Gary Black tweeted this out just before the earnings call that he said that even if Tesla had an earnings beat, it does not necessarily translate to a stock price increase. Tesla's beaten the Wall Street consensus earnings per share in 14 of the past 16 quarters. Tesla stock only rose on the following day in 7 of those 16. So if you're trying to play the earnings, then it's safe to say that it almost always falls. There's that 3-day rule. Maybe we're there, maybe we're not. This is a very unique earnings. So let's hear from others. Alexandra, what's your thinking about how you invest in Tesla?
Yeah, actually, thank you for giving me this opportunity. I mean, I had explained this before, and I think my situation is, very particular. I mean, on one side, I'm close to what most people consider retirement age. I don't feel at all as if I should retire, but I'm 57, so I should have a much more prudent approach rather than being all in stock. And then you all know I had been fund manager, so I should be much more diversified because that's the school I learned, and yet I'm all in Tesla. So that's already very strange. And I always hope nobody gets inspired by me because I'm just crazy, right? I'm a crazy old lady. The second point is I'm still running a highly profitable business. Every week I make money I can put into stock if I have no other need for it. no kid needs to be paid college or no other, important expense comes. So that is a very fortunate situation that not many people have. And so I feel like, I can talk the talk and walk the walk because I'm in the situation I am, being the founder of a business that pays us all very well. And so not depending in the immediate future on selling stock or whatever. So my view on Tesla can be quite detached. Sometimes I feel I need to gamble a bit, then the highest risk I want to take is leaps. And then, and I've lost money on leaps, like, big amounts of money. And I tell myself then again, just stop the gambling, go in the stock and stay there. But, don't think I'm doing everything right. I'm not. But one thing I'm convinced about still and still years to come is on a 3, 5, and most probably 10-year horizon, Tesla is exactly where I want to be. And giving my risk assessment of the rest of my life, right, of everything else that is paid for and the income that I can count on, I'm comfortable with that. But not many people are in that privileged situation that I am in. So you shouldn't, just think this crazy old lady can be all in and let's do the same thing. You have to assess when your money needs arise and how far you can accept losing money. When I go into options, I understand that all that money can be completely lost. I may put stop losses into them, or I may go all in until the end, or I may roll them to a future date if really I feel I'm still right, but the timing didn't work out. But I just want to make sure that people don't take us as, examples of how crazy they should be. Each of us has to evaluate what the money needs are, how much money you can really spare. And if you can't spare it, even though it must be a lot of fun and you may be convinced of Tesla, it could be that Tesla is not the right stock for you just because it comes with so much volatility. And this earnings called for it again. I still think there were lots of good nuggets in that call. I was annoyed by a couple of other things of it as well, but it didn't bother me because, it's not contrary to anything. I don't need that money in the short and medium term. And I can just sit it out. Would it be great that I could buy it lower? Yeah, it would, but I just don't feel this is a stock I want to gamble with. I want to go out and back in. And I know lots of people who do that, and that's great. It gives me anxiety, and I don't want to have to deal with that.
Yeah, thanks, Alexander. So first of all, probably repeat this multiple times. This is not financial advice. The goal is just to explore every single different kinds of investing philosophies and situations. Every one of us are in different situations, but if we can have, try to represent different people, help them, help me, help all of us kind of deal with what's happening with Tesla. We all think it's a good investment. We're called cyber bulls, but at the same time, we're going through massive drawdowns. We're going through tremendous, upheaval, and there are people that are wondering, how do you maintain your conviction? How do you keep your psychological mental health well? And so that's the goal today. Different people have different strategies, different scenarios, and let's see if we can kind of walk through different ones. You don't need to share your own personal, but really appreciated that you just did that, Alexandra. But we just, we can share the hypothetical scenarios too of what other people are feeling about.
Yeah, and I appreciate that. And you're right. I mean, I don't mind sharing mine because, I'm as talkative as I am. I just want to add one last, and Xander has another very good view on that because he had an interesting conversation with Jason the last couple of days. For me, time is a currency. If, it comes probably with my age, and when you're young, when you're 20 or 30, you've got a lot of time. So it is important to understand the time you have in life, but also the time you have to earn money, the time you have until you need that money, the projects you have. So time is the ultimate currency, in my view, rather than the dollar or some people thinking the Bitcoin or whatever. It's all about the assessment of time.
Okay, well, why don't we move down the line here? Jeff, did you want to add something?
regarding the earnings call?
Well, not necessarily. Like right now, we're talking about different investment styles and how people can think about it, approach it.
Yeah, I mean, my number one advice, I hope if people remember kind of one thing or two things, or one thing from me is don't tailor your investing advice from Twitter because you won't know the situation of the person that's giving the advice. They won't know your situation unless they're a financial advisor and they understand how to properly advise a client. Just, I just block it out. I mean, you can hearing stories, that's fine, but you really don't know, the time, as Alexandra and Xander described, time horizons, age, risk tolerance, and so forth. So, it's interesting to hear the stories, but yeah, I have a super high risk approach to, basically been long the stock since 2012, 2013. And so, yeah, I mean, I trade, a little bit around, portions of it, but basically I have a core position, that I've held and I've added to over the years. But other than that, honestly, I don't have any advice other than to just understand, your risk tolerance and your time horizon, and don't just, try to apply someone else's story to yours unless you happen to find that after a detailed conversation, you have the exact same situation, which is sometimes rare, or if not entirely rare. Just make the plan that works for you and works for, your lifestyle. And, it's the only way to thrive. I mean, the earnings call was a mystery to me in many ways. I've listened to it again. I don't think as investors we should have to hunt and try to find, what the good nuggets are. I think, the leadership team should be very clear in what they are, and as well as the risks. So I had no issue with sharing of risks and being transparent, but it's great. It just, to me, it's a matter of concentration of both, like really not really kind of hyping up what's interesting and then spending a lot of time on macro. We're hearing other mega caps report out. I don't hear this dominant thesis on macro. The one that to me was like, it entirely confused me was, there's a couple of wars going on and they're tragic, but just trying to do some correlation to car purchases to me was just reached a bizarre low point on the call. But what I walk away from that call with, and as I scan the environment, there's just tremendous catalyst for this company. And once this is, end of October, everybody's speaking about 2024 growth, and that conversation is going to be set at some point, probably when they get through Q4 deliveries and, third week of January, they're going to probably give an outlook for how they see, 2024. And then, whatever happens there happens. And then immediately the conversation is going to switch to 2025. And the further we advance in this timeline, the higher the probability some of these options have to come through. When I say options, I think FSD, I think, robot, I think, this $25,000 car, which isn't really an option. It's on their portfolio. And then the Cybertruck's ramp. So anyway, I think, we're at this point in time where it's all right, you're in this indeterminate state. You've got some weak guidance. The company's probably going to have their biggest quarter ever. And then you're going to have all these and we even mentioned all of them with the IRA coming, point of sale in North America, and then just really the capitulation of the rest of the industry. So I think you have to just take all those factors. And for me, it says this is a very good, multifunctional, multi-business, medium to long-term play. And, we'll have to see how the short term plays out. But you're not going to hear from me, go out of margin or get into margin. You're not going to hear any of that from me because I don't know your situation, or do what I claim to know it. And I think you should just do what feels right to you. And there's a lot of success stories out there, and there's a lot of stories of despair. I just think you have to understand the extremes, because sometimes the success stories get played over and over on Twitter, and there's a lot of other stories out there. So just, keep a balanced outlook and do what's right for you.
Jeff, would you say so it sounds like you'd say that there is a time for margin. What's your perspective on it?
It depends on the person. It depends on your risk tolerance. I mean, the chorus of people that were, literally locking arms and extolling the horrible virtues of margin when it was at 100 to 120. I mean, if you went in you're looking really good right now. So that's why I'm not going to tell anybody like when to go in, when to not go in. It's a personal decision based on your financial situation, and just understand the tax laws around it, understand, what's deductible, understand, just understand everything, understand the interest rates, understand, everything before you decide to do anything. But I can't tell you like there's a good, I mean, would I have done it at 1.2 trillion valuation with 1,000 times forward earnings? That's probably not a good time, but I'm not going to tell anybody. Everybody's situation is different. But this giving out unit advice, I mean, there's advice from the earnings call last, I think 3 earnings call, stay off a margin. It was at 140 to 160. And, I mean, I don't know. I don't agree with that. I don't agree with,
there's 100,000 people, maybe 500,000 people, maybe a million people that listen to that earnings call. How could you possibly give that advice out? So anyway, so I think the short answer is everybody's situation is different. And, you know, you need a plan where if everything just went to, the way I think about it is like, if everything went to zero, do you have many years of living, expenses, and, can you comfortably survive? If the answer is yes, then, you know, and then you can start thinking about other things. But again, I think it's different for every person.
Okay. Christian, did you want to contribute?
Sure. What's up, guys? Yeah, I loved everything everybody's saying. I'm a little bit different. I'm not an all-in Tesla investor. So, just a quick thing, the way I think about things, I do a lot of reading. I read a lot of books on investing over the years, and I like to trade also. I like to look at other companies. It's almost a game to me, like finding companies that are undervalued. And remember, Tesla's a great company, but there's life cycles of companies, right? Tesla could be in a nowhere situation. We've seen that for like 3, 4 years, and then it explodes. And then it's got another 3, 4 years, and then maybe it does another explosion. But it's like in the meantime, there's lots of companies that could be doing well, but maybe when Tesla is not in a great earnings upswing. So that's the way I think about it. So I've done well with Tesla from 19 to like 21. It almost did that 20x, right? From a 50 billion market cap to the, 1 trillion, 1.2 trillion. And I caught a lot of that, traded some of it in there, but caught a lot of the gain. But now my theory on Tesla has shifted. It could still be a great stock. There's always unknowns, and I'm not smart enough to know exactly what's going to happen. So I do a little bit more of a diversification strategy, more of a trading strategy. So I have a Tesla position, but it doesn't overwhelm the portfolio. Because again, I do like listening to other conference calls. I do like listening to other companies. There's a lot of growth companies out there that are going to do very well along, with Tesla. So I like that. It fits my personality. So again, this is not financial advice. It's what fits me. I don't want to be in one stock because I just don't want to track one stock. That to me, it's great for some people, but it's boring to me because I like doing other things and I like trying to figure out different opportunities that are in the market because there's thousands of stocks, right? And there's thousands, not thousands, but there's hundreds of good companies in the world. So I do more of that approach. So I have my position. And if Tesla does what we all think in this room it's going to do, another 5 or 10x, you don't need to be all in to do really well. So that's just the way I think about it. You could have a nice sum, maybe it's 10% of your portfolio, maybe it's 15, maybe it's 20, maybe it's 5. But if it does that incredible thing, you're still going to do very well. And you can kind of maybe just sleep a little better at night. And that just helps me. I'm a little bit of an advanced stage. So that's the way I think about it. So I respect everybody's opinions, but that's the way I kind of go about it. It's worked for me so far. And, I'm kind of just sticking with that strategy.
Okay, thanks. So for me, it's pretty straightforward. I'm all in on Tesla. Doesn't mean that I don't have, a house and cash and investments that I cannot sell, but the stock that I am able to control, I have put into Tesla. It took me a decade to move money there. It wasn't this one situation, all of a sudden I'm all in. I just kept finding that this is kind of for me the both simultaneously the safest investment as well as the most potential to grow the most, knowing that it's a very volatile stock. I am very, aware and expect that it's going to do this. And I'm just taking a look at this chart that somebody put together for Tesla stock from 2010 to 2022. There was a 50% drawdown in 2014. There was a 54% drawdown in 2018. There was a 61% drawdown in 2020 and then a 66% drawdown in 2021 to present. This is just right before the end of 2022, before the beginning of this year. So, this stock is going to go up and it's going to go down and it's going to go up massively, but it's going to go down massively. So there really isn't much of, any advice I have, but for those people who are in the same situation as me, you know, I'm affected by this. Of course, I'm emotional, but I just basically remind myself of, that the future is going to be very bright. There's tremendous potential for this company. Even if we lose auto and some other company comes up with robotaxi ahead of Tesla and wipes out Tesla's auto business, it's still an energy business. It's still a bot business. It's still a dojo as a service business. So it might lose a lot of money, but I just can't see it going down to zero because of all the different kind of fires and the iron in the fires that Tesla has. And so I'm willing to make that bet. So when something like 2022 happened and what's happening right now, it's disappointing. But I just say to myself, well, I guess I'm 2 years more. I have to just wait and be more patient 2 more years or longer. So that's, that's the disappointing part about this whole thing. So let's invite some speakers up and ask them what they think. So Tesla AI bots.
Yeah. Hey guys, thanks. Yeah, I have to say I agree with everything that was said, except Christian, when you said Tesla is boring, man, there's nothing boring about trading Tesla stock. It can be quite the ride.
No, well, let me just clarify. I didn't say trading Tesla stock isn't boring. No, it's crazy. What I'm saying is I don't just want to own one company in my portfolio to be 100%. To me, that is boring.
Yeah, I totally get it. So I'm very fortunate. I'm probably one of the few on the call that, was happy when the stock came way down at the end of last year because I sort of missed the run. And like everyone else, I'm like, man, I totally believe in this company, but do I want to buy in at a 1.2 trillion, valuation? So when it came down in December, I started buying and it was fortunate. The tip I would give people, not investment advice, but something I should know because I'm a 60-year-old man who's had a 401k his whole life. I didn't realize that if your 401k restricts you from trading individual stocks like most of them do, you can just put that in a rollover IRA and you can trade anything you want. And so that, uh, watched a video on that. Fortunately, did that just before the end of last week. And guess where I put my money when the stock came back down? So I'm not quite all in. My other big holding that I'm kind of a believer in is Ron Barron's future fund because it also has SpaceX. It's one of the few ways to trade SpaceX, and I believe that SpaceX will be a multi-trillion-dollar company someday as well. So that's if any of you know it, it's not doing great right now. I think it's 40% Tesla and 10 or 20% SpaceX and then a bunch of other holdings. But, it's basically an Elon fund that is interesting to follow as well. So thanks. I follow all you guys. I listen to this show all the time. Jeff and Herbert, when you guys go off on cogs, it's my favorite thing to watch. So thanks, guys.
Oh, okay. That's great. Let's bring up, thank you so much. That was fantastic. Alan, come on up.
Alan, you're muted.
Okay. Should we move on from this topic or should there more to discuss here? Or should we start talking about new information that we've received or learning about Tesla in the last week? What do you guys think?
Before we move on, I'd love to encourage people to reply to the tweet or post up at the top of the space and kind of give your philosophy. I'm always looking to learn and see how people think about things and see what I could take away. So like reading Jason's post, having James Dama chime in. I love that we can see the perspective of investors that have been around a long time. I think there's a lot of people, as we heard from the gentleman who just spoke, that missed the initial 20x, and they might have gotten in, after in the 300 range, in the 400 range, and so like understanding how you're dealing with it is interesting to me. I'm a student more than I am a teacher, so I'm trying to learn. So again, it's not investment advice, but just sharing your stories of what your takeaways are. If there's, loss prawn that you have that you care to share, I'll definitely make a video with Herbert and share my 2022 takeaways, which I think are quite impactful. But it isn't financial advice, as we say, because it really is a unique journey that you'll go through, especially when it comes to the number one option traded stock out there.
Would you call it lost prawns?
Yeah, PR0.
Oh, so you can make a prawn video?
He's
with
so
the-
proud of it, Jeff. He loves it. Losing money. It's a badge of honor.
I've gotten
Just-
so good at losing money. It's incredible.
You're going to make a prawn video with Herbert?
Hey, it'll be blurred out.
I'm so glad you spelled this out. Baxenda, I think you should explain your discussion that you had with Jason. I think for people who haven't read it, I mean, I know you pinned it up there, but it's really an interesting theory that Jason has, which is that actually your shares, part of a company, and that's how he values them. So you want to get into that?
Yeah, I think this perspective of not looking at how many, how much money your portfolio or your shares are valued at versus looking at it as how much production you own in the company is just so freeing you see a big drop and you see your portfolio drop, but in reality, your shares did not drop. So what does that mean? Warren Buffett has a great video about, or a great talk about, how you don't go out there. If you own a farm, you don't go out there looking to see what is the price of the farm that you could get on the market every day. But yet, most of us, and I guess some might be better than others at not looking at the stock price every day. But, around earnings, I imagine everyone is looking at the price. And so having that perspective of, the price falls if you have the means to buy more, if you're interested in growing your position, because in reality, what was your investment thesis when you made the investment? Was it to try to see the number only growing and only going up? Or is it to buy more and more of company that's what you're interested in? So I do think that ultimately the advice, or what you heard Jeff say, it's such a unique journey and it's a unique perspective. It really depends on so many variables. But where someone like Jason, he's pretty young, but he keeps making these impeccable timing things, like selling his house, in the low 100s and putting that into Tesla. So, I always wonder, is it time? I mean, is it luck or skill? And how has his perspective helped him, time the market? Christian talks about, the ability to time the market. That's one of the things that I really loved about communicating with Christian over the years. I think it's about, what, 2 years now or so. And I always was taught that you can't time the market, but it seems like that is just something that you're taught. And again, I mean, I guess this is not a financial advice statement, but it's like a investment philosophy. I would love to hear, people say that they can time the market, and argue, not say it, but argue for it, because it seems like if we just ignore data and market sentiment, then yeah, it's so impossible to make any decisions. But in my perspective, it seems like if you can put macro together, understand liquidity, understand, what are earnings projections, and what is Wall Street looking at, then one can kind of navigate the waters. Is it going to be perfect? No. So I think that the saying should really be, you can't time the market perfectly, but one perhaps can, be a monkey throwing darts and get lucky more than they get unlucky.
Yeah, I love that. And I just want to say it, like, yes, you can, I think, with practice, you're not going to do everything perfect, but there are times where you could see, okay, this is probably, maybe I should get out of here. I've made like a lot of money, and maybe I should just kind of see where we're at. And then, could it go higher? Of course, you might miss some of that. But the way I look at it is, and this is probably not going to resonate with a lot of people in here. I'm like probably the oddball of the group. I don't, I look to try to compound. I want to grow and I want to compound the investment portfolio. For me, it's not about a mission. It's not about, even though I love Elon, I love what he's doing with X. I admire him and all that. But the goal for me is to compound wealth. And you can't compound wealth sometimes if you just sit there for 3 or 4 years and you go nowhere. So that's just me. And I understand in the fifth year, you might catch up, but I can't sit in a spot. It's not my personality. So I rather do it in a different way. And where a lot of my accounts are not taxable accounts, they're retirement accounts. So I could buy and sell and there's no consequences at all. So I have that advantage. So I can do those things and not worry about any repercussions. So if I want to get back in or if I want to come out, I just look at my P&L. Hey, I'm up on this. I'll go to the next thing. Like if I see a better opportunity, and that's how some of the greats do it. Like you can't get anywhere if you're just kind of sitting there hoping for the best, right? And so like one of my guys that I love, and there's a lot of investors I love, but Stanley Druckenmiller in his early days, he would talk about switching on a dime. Even though I don't short stuff, he would be long and then, he might decide I was long, but now I don't feel the market anymore. So he gets out. He gets out with a huge position. It's not the end of the world. If it goes up a little more, he's fine. Maybe he sits in cash. He's like, I have that. Sometimes I'm sitting 70, 80% cash waiting for something to come into me because I think prices have gotten ahead of themselves. Now, you could say, well, that's stupid because it might go higher, but I don't care because to me, it's overvalued and I know the market will always present me with another opportunity. There's so many more stocks. So that's why I don't ever get that FOMO feeling and I still have my position. So if Tesla does do what it does, I have my position. Now, maybe it's not 100% position. And someone that has a all in position, if Tesla does a 5X, yeah, they're going to destroy me. But I have a different way. I'm still going to do very well. I'm sure my other portfolio might not do as well, but it'll be okay. And I can kind of just sleep out at night being a little bit older. So that's the way I look at it. And there's always opportunities. So I don't look at it as I got to get every dollar into Tesla today because, it's going to do a 5X, in a year. So I just don't have those thoughts anymore. To me, it's about a constant grind up, because if you have a huge amount of capital, not huge, but like a good sense, say you have 6 figures, if you could grow that even at a 20 to 30% compounded growth, you're going to double your money quicker than in 5 years. So you'll keep doubling. It's all about doubles, right? If you could double a nice sum, double it again, you don't always need 10Xs, right? If you already have a lot of capital. Now, the last thing I'll say, and I'll wrap up, if it's someone that's young and they're growing and they believe in Tesla and they convicted in Tesla and they're like 25 and they're just starting out and they're throwing 5,000 at it and they're throwing 2,000 at it and they're throwing 10,000 at it and they're just dollar cost averaging in, yes, I think that's a great strategy because it's probably better than the S&P doing something like that. But when you're dealing with bigger amounts of money, and if you just say, hey, I'm putting it here, somebody could do that and they could take those 70% drawdowns on huge amounts of money and it doesn't phase them. But that's not me. So I can't do that. So I think what I'm trying to say is know who you are. If you can't see a huge amount of capital draw down 70% and it not affect you, then okay. And you think long term, 5 years, you're going to be way ahead of the game. But if you can't stomach that, why put yourself in that position just because everyone else is going in on Tesla? So I think that's important.
Okay, and I think it's important that I speak up here because both Xander and Christian have their point of view. But let's be very clear that the facts show that it's impossible to time the market. And I know you're not saying perfectly time the market, but out of professional, traders, less than 10% are able to beat the this kind of like the standard S&P kind of scenario, right? Even though they think that they can time the market. Now, the world has changed too. I mean, you might have been able to do it 10 years ago, maybe 5 years ago, possibly, but do you still believe you can do it now? There are instant microsecond traders. There are AI that's doing this at this point. I'm just saying for the vast majority of people like us, don't think that you can do this. Now, hey, I'm not saying, again, I don't want to give financial advice. You can do all you want. I just don't want to leave the conversation with the last two speakers here making it people feel like that's possible even. I think the most data has shown that people it's worse for them if they try to time the market than just sticking it out and waiting long term.
I agree. And I'm not saying time the market. I just want to say real quick, it's more of a buy low, sell high strategy. You could just see what your portfolio is doing. On a typical S&P, 8 to 10% is a good return. Now, it usually doesn't do that in a given year, but if you average it out over like 5, 10 years, you'll make anywhere from 8 to 12%, right? So if in your portfolio, you buy a stock, not forget Tesla, just any stock, and it goes up like 10X, well, that's way better than an 8 to 10%. So it's not about timing the market. It's about, okay, I just 10X'd my money. Let me take some profit before maybe it goes down 50%. Like, to me, that's just prudent. And that's just an investor being responsible in getting an outsized gain that probably has a little bit of luck involved with it. Now, if you're just going to sit there and you don't need the money and you could sit there for 20 years, 30 years, and you just love this company, yeah, go for it. But I'm saying for most people, I don't know that's their position. So again, it goes back to your personality and your position. So that's all, Herbert. It's not about timing the market. It's about how you think about investing in general. So that's where I want to get across. I know you love Tesla. It's only Tesla, but there are other companies in the world. There are a lot of good companies in the world, and you don't have to put yourself up to all that uncertainty in one stock, even though you think it's like,
Well, just a second here. You're mixing
you
two
just have to
topics
be careful with it.
You're mixing two topics now. This concept of a single stock, which is absolutely dumb, versus this idea that, oh, I'm going to buy low, I'm going to sell high. It sounds very logical. If I make my 10X, then I'm going to sell. If I double this, then I can double again, then I can double again. I mean, these things all sound great the way you say it, but reality is, and then this idea that if the stock jumps, whatever it is, double, 10, I'm going to sell. Well, No, you stop there and you evaluate what's happening at that moment. You don't do it based on what's happened in the past. You think about the scenario it is now. Now, if you are concerned, you want to save your money, whatever it is, then absolutely sell or sell enough to cover if you think it's a gamble, cover what you put in. But anyways, again, it's not about, there's no rule that if it goes up by 10x, that means I should sell right now. Again, I know you're not saying that. I'm just trying to warn other people listening to this that it's just best to if for people like me and others who are not following the market daily, not trying to time it, and knowing that the facts state that over time, 5 to 10 years, you do better just leaving your money alone in company, multiple companies, if you want to be less risky to protect that. Yeah, that's what they've known. That's what the vast majority of investment advice is at this point.
So yeah, so defend kind of what I was implying is this. It comes down to what your expectations are, right? If you're investing for a 10-year, time horizon and you're not going to be watching it, then absolutely you shouldn't try. But like my portfolio went down like 86% because I had leaps and I refused to, reduce the danger levels that I brought the leaps up in 2022, right? Seeing how Tesla could be. So like understanding like Jeff was saying, your risk tolerance and will you be able to sleep at night if there's a I think that's the point that ultimately that I'm trying to make is make sure that you are comfortable with your decision making. Like Alexander said, if you buy a leap, you got to be willing to lose 100% of it. Understand what you're doing, and I think a lot of people have greed, and as I did, and I still do, and testing it right for me, testing it with buying a call or buying a put or selling a call or selling a put and seeing it up, but then being greedy and refusing to close it because I'm looking for some round number. I think like all of those things is how I'm evolving as an investor slash trader, and also preparing myself for the future where I'm 41 or almost 42. I'm trying to grow a portfolio where Christian is talking about protecting a portfolio. And I think like all of those little nuances is why we say none of this is financial advice because we don't know your specific situation. But there is something to be said about ignoring data, right? So if you can't sleep at night because you're worried about Tesla dropping below 206, then did you listen to that voice telling you, you know what? I don't feel comfortable going into earnings. We know that they didn't deliver so many cars. It's probably going to be a bloody day. So let me create a scenario for myself from my portfolio, to be able to be excited that the price dropped, right? I think that's the lesson for me and I actually executed that not perfectly. I wish I would have gone super heavy with puts, obviously, but again, I think the points are it's very specific, but I think telling the stories about what happened can allow someone to draw their own conclusions. I think we're so fearful about this financial advice stuff, and I think we obviously don't want to be accused of me, Kevin, got that situation happen. So I think, but telling the stories about what happened and what were your takeaways, I think there's nothing wrong with that. And like I said, I'd love for people to share their perspective on.
Yeah, I think it's a great topic. I think people have interest. I think anybody that wants to come up and share, how they think about things, I think it's great. And that's how people learn and you experience what other people, have done. And maybe it hits you and say, oh, maybe that fits me better. Or maybe you're not sure. So I think we're on to something here with this chat. But anyway, you guys can move it wherever you want to go.
Pivot, you're up at stage. What would you like to say?
Hey, thanks for the invite. And I wanted to say hi to all the Tesla royalty in the room. Here's my 2 cents as a 50-year long investor. I learned at the feet of Warren Buffett. I believe in that guy's philosophy. And what he would tell you is unless you really have time to understand how Wall Street works, just invest in an index fund. If you were to take a look at the S&P 500, for the past 15 years, it's averaged between 10 and 15% ROI every year and on average. And That's probably good for most of the breadcrumbers that are out there trying to have a retirement. On the other hand, if you're looking to intensify your return, then you better learn how to understand a business. And the reason how to value a business, the income statement, the balance sheet, where they are in the market, what's their market share? What's their roadmap? Reason why I'm in Tesla, frankly, is because I know what's coming down the pike and I want it before Wall Street wants it. Wall Street doesn't want Tesla right now, but I want AI. I want robo taxi. I want Optimus. And just because they can't model those revenues because they're aspirational doesn't mean that I can't load up. And that's sort of how I look at it. The other big facet for me is strong leadership. Though Elon may not be the best host for an earnings call, that guy is a true leader and he represents strong leadership. So that's what I wanted to pass on. Thanks for the time.
Yeah, there's really no question regarding like his leadership is, I think, second to none. I think in the trenches or even, the strategy for the company. I think we're gonna look back in a couple of years on, this move is happening right in front of our eyes. The auto industry is going through a major transition. They're changing the propulsion system, that cars will drive with. And, this is, as big a change as anything in the history of auto, and this will be written about in history books. And this transition of, do you let it kind of like stagnate because your other competitors haven't invested in EV and therefore the adoption rate will stagnate. People won't be able to find what they want, or do you push it and do you push the limits of it? The way you're going to get the greatest rate of transition to sustainable energy is to get as many cars out as possible. And how do you get as many cars out as possible as you make sure as you're shipping them, you're turning that inventory, you're selling all of them. So I think you're gonna look back in history and figure out that, that they didn't need to take their margins negative, all these horror stories I think people are putting out there that they won't need to do that. Just again, this is my opinion. We're gonna, get through this compression and then, hopefully on the other side of whatever the Fed's doing, like there'll be a consumer that's able to purchase vehicles. Because right now the Fed and this is, honestly, this is mostly, Fed induced at this point. I mean, the economy is, a decent growth. The jobs market is going pretty good. Inflation is in the threes. I just think a post-COVID economy is, in my opinion, but we don't have the economy that we left before, 10 plus trillion dollars, $15 trillion was injected into it. We have a different world. So I don't know how they think they're going to unwind down to 2%. Maybe they'll get to 2% inflation, but the question is what amount of destruction on the way. So as long as there's a consumer on the other side of this, you're going to have Tesla with, again, the COGS train doesn't stop. As long as they keep their suppliers, fully utilized and they keep filling up their own factories, they're going to keep taking their cost structure down. So that's not going to stop. The question is, the rate of RP changes was very steep in the beginning of this year, January through April. If you actually looked at it from May on, it went from, worldwide price cuts to regional certain trims and much smaller value price changes. Again, I'm putting S and X to the side because it's 4% of the volume, but for 3 and Y, anyway. So what's on the other side of this? I think, we're getting to a point here. I think Q4 is going to be a major transition point for stabilizing gross margins, increasing volumes. And so, I'm not as doom and gloom, but I do recognize that there's risks out there. And I think it's totally appropriate to highlight those risks. What was interesting on the GM call this morning, the CFO was asked, hey, there's other people talking about, all these macro risks. And he goes, I hear that. He goes, but we're not seeing it in our demand data. We're not seeing it in the consumer. So he's on the record saying that. Now he's on the record saying that. And, within 24 hours, they, capitulated on EV. They, their cruise business was suspended in their first city that they were able to fully operate around the clock. And then their biggest factory was shut down by the UA. But other than that, yeah, they don't, they see strength in the consumer, which I found interesting because, now they're looking at least through Q4. I don't know if he was commenting on early next year, but I found that to be interesting that they're still seeing a lot of strengths in the consumer. So Tesla may have overplayed that a bit, but again, we can Monday morning quarterback every decision. But if you look at all of their decisions kind of on an arc of it, kind of like a 10-year history, in general, they've been making very good decisions to stand up the business with the S and eventually the X, and then eventually bring, the master plan is working. Is it working down to the year or the month? No, but largely it is working. And I think on the other side of this experiment, you're going to have people that will value EVs and will want the continuing purchase. We're nowhere near full. 8%. People think they see a lot of Model Ys in the street, depending on where you live. But again, only 8% of the car purchases this year are EVs, and half of them are Teslas in the U.S. A lot of people on the call here are from the U.S., but we have other countries too. So anyway, there's a tremendous amount more market penetration that Tesla can be doing. The Y's not old. And again, there's, new vehicles on the way, with Cybertruck and with the new Model 3. So yeah, the way coming just full circle on that, it's going to be interesting to see Ford. I think we'll report next week. We'll get Stellantis as well. We'll get kind of a good view of where they're all at. It sounds like the UAW tonight came down to 25% total wage increases if all three can get there. So now there's going to be peer pressure on them. I know there's other aspects besides wages, but it sounds like after the UAW, which I kind of anticipated this too, and so were our conversations, but after the UAW put that large GM plant on strike, it puts Stellantis on strike. To me, this is, the, what do you call it? It's the grand finale in the fireworks show. And, he's going to try to get as much as possible in a very short duration of time. And they're going to make a deal. That's what I think is going to happen. But anyway, I took it there, but we can take the conversation anywhere we want to go.
I think you're making a lot of good points, Jeff. And what I just want to, say, Q4 could still be complicated, right? It takes time at the moment to ramp Shanghai, then takes time to get all those cars to Europe, even though we've had the first deliveries. We are getting encouraging news on work to be started for the expansion of Berlin in the first half of 2024. So that's great. But I mean, the work has to be done and it has to ramp then thereafter. So this whole car business is still growing. I think they took the right decision to start the next generation in Austin, make sure that that's where the engineers are, that's where they will set up the factory in an optimal way to then copy it to the new locations. And I think there'll be multiple locations, including Mexico then. We'll also put a lot less stress into the building phase of Mexico. I think they learned that lesson very quickly. I mean, in all locations, I'm not saying Austin was perfect, and Shanghai was certainly very efficient, but in all other locations, it's just complicated. It's complicated for everybody, including for Tesla to obtain permits, to ensure that it works as quickly as they want. And I don't doubt a second that the teams are as motivated as they've always been. So it's just up to us to really, appreciate that building the factory, because that's really the product. Of course, it's the cars, but it's the factories that are the product. Building those factories is the most complicated job there is. It's not just as if, I'm always taking the mickey of Christian and Jeff talking about Celsius and Shepard or whatever, however you pronounce that. You can do a new taco recipe or you can have a new flavor for an energy drink in no time at all. But you can't build a new car and even less a new factory for the car at which you're constantly improving cost of goods sold and putting everything in question, going back to first principles without losing time. That's just time is the ultimate currency. Eddie, go ahead.
Like she said Chipotle for everyone wondering what she said.
But
No, I was asking you, you've still not been to a Chipotle, right, Alexandra?
have not eaten.
Okay. Should we take the conversation? I'm just kidding. No, we should go to Eddie.
Yes, I completely
Me
agree
too.
with Jeff's position about giving financial advice. But I wanted to say one thing about investing in Tesla, and especially with the community that we have. I think it's really awesome that we have so many people that contribute to it that helps us with this decision. We got Joe Tegmeyer showing all the investment they're making in Austin. I forget the other guys' names for Berlin and stuff. But you got a lot of experts. Of course, we shouldn't take all of their advice as gospel. And you should try to reaffirm it and try to do as much research as you can. But that's what makes this company so easy to invest with, because you get so many information that you don't get with other companies. I have an engineering background, and I mean, I was engineer for 35 years, and I've been able to retire from my investment in Tesla. And, I'm very thankful for that. But I mean, I could reaffirm, I guess, a lot of what we see in from a lot of these experts. And it's just nice to be able to, be able to talk to them and be able to get this information that you don't really get from another company.
Yeah, I think it's a great point. I think there's a pretty vast set of expertise in the community. And I think you made a great point too, Eddie, of you absorb it, you listen to it, you understand it, then maybe you try to do some your own triangulation in the background. Because not everyone's infallible. People make mistakes, and sometimes people are too bullish, sometimes people are too conservative. But yeah, but there's information out there. Is your point? I think it's probably more than any company out there too. So I think it's a great thing that there's some diligence, being done out there.
Yeah. And just to back up Eddie's point, the reason I got involved in Tesla at all in 2019 was because of the community, YouTube and Twitter at the time. Like, it was invaluable. And to me, I think this is important because it was such a easy decision. I think now it's still easy, but it's a little bit more complex. Back in 2019, after the Q1 disaster, there were so many legitimate and I trusted people on X, formerly Twitter, giving great information that the cars were going to be delivered, the growth was about to explode, and you had the mainstream media saying the complete opposite. So it was a life-changing opportunity. It still is, but I'm just saying back then, the resources of this community helped me tremendously to get the conviction because I saw the data and it was completely different data, but it was accurate data from what the data was coming from the mainstream and the short sellers and the big wigs that everyone trusted. So I totally get with Eddie's point there, and it was amazing time.
Going to say something?
Yeah, I'd like to ask a short question to, well, whoever likes to answer. Meet Kevin, as most of you know, and that's also a Tesla investor, has pointed out multiple times that Tesla actually doesn't hold 26 billion in cash. Because if you actually subtract the bills they have to pay, they're closer to, well, I think 5 or 6 billion. Does anyone have any comment about that? Thanks.
I think they have about 22, 23 billion in cash. They opened a credit facility, which is maybe 2 to 3 billion, and they have free cash flow. So I don't know why they would only have 5 to 6 billion in cash. That doesn't make sense to me.
Yeah,
Yeah,
I
I
think
got that wrong.
yeah, I think he's saying liabilities on the balance sheet would bring the net cash position. From what I'm understanding, I have heard that mentioned as well, but it's like ignoring that they have sales coming in. So then it's like saying, if in a snapshot of one moment, if they had to liquidate, if their business was hit by a meteor, how much cash would they have left after you took assets and subtracted the liabilities? But I'm not sure that, and I'm not a CPA, so I'm not sure that's the way I'd look at it. And I do own several businesses, so I do think about this, but you know, I'm cautious to give any more than. I don't think that's exactly the right way to look at it.
Yeah, I think I understand what you're saying now, but so that goes to the point where we're talking about before about, with a buyback. I think right now, especially the way Elon's talking about macro, a buyback, if we were going to do it, was when the stock was crashing at 100, not now. Like, this is the time to keep investing and having that cushion there. So I agree with that 100%. But so, yeah, I'm not sure the accounting exactly.
Yeah, because the only reason I wanted to point that out is because he also makes the point that they might need to raise sooner or later. Yeah, that's the second part of it.
Yeah, but if they're cash flow positive and like you saw, they had free cash of what, 3 billion, and then they used two and change on infrastructure. So their net cash was what, 0.8 or something like that off the top of the dome. So
Yeah.
yeah, so I just don't. Yeah, I don't think that you can look at you have to look at what the cash flow is. If you have new money coming in and it is going to be net positive, then what are we worried about, right?
They're not going to go to the capital markets in this environment And there's a difference between setting up a revolving credit facility. They throw off, their businesses throw off cash already. They could deprecate an investment if they needed, cash for some reason. The other thing is, you compare Tesla to existing auto businesses, they have these gigantic financing arms. They've got uh, 50 to 100 days of inventory just in their dealer network. And then they have their four-wall balance sheet inventory. Tesla's 15 days all in, 15 to 16 days all in inventory. So they have something called a very rapid cash conversion cycle of when they have to pay suppliers, how quickly they convert in their factories. They're still building a tremendous amount of orders. So yeah, I don't, this is not on my bingo pad right now. Again, I could be wrong, but I don't see them, literally picking the worst. If Tesla was going to do, I mean, this is why they set up that credit facility last January. And there's been successive rate hikes and steepening since then. It was for that, that situation to have that extra guard band. I don't see them needing capital at this point. Again, what's their credit facility? I think they're at 26 billion now in cash. I mean, GM, like the company that, ships, millions of cars, they have 13 billion in cash. Tesla's double the cash of GM.
Yeah, I agree. But I don't think it's out of I agree. I don't think it's going to happen. But I think Herbert interviewed someone that we respect a little bit, and he talked about a capital raise just because to get that money to do all the things that Tesla wants to do at this high market valuation. Because some people, even though we don't, there's some people that still think if some of this stuff takes a while with the robotaxi and Tesla bot, that it's a high valuation for just being a pure auto company, right? I know it's more than that, but the valuation right now, it is baking in a little bit of the future going right. So if none of these things hit and it just turns out that it is basically an EV company, it can still do well, but it's not quite what we think it is without these call options. So in that sense, I could see it. And then the only thing I'll say about Tesla, I think Alexandra had a debate and I was on her side saying we shouldn't do a buyback. There's companies like Google, like Google, they have like 100 billion in cash. Companies like Apple, I mean, that is monstrous cash. Don't get me wrong, 22 billion, 23 billion, that's a lot of cash. But for Tesla's business, that is not comparable to like, a Google or an Apple that has, over $100 billion sitting on their balance sheet. So I think we have to keep that in mind when we think about Tesla and when we think about like how we allocate capital.
Christian, I agree with you. And that's why I do every quarter, my green and orange table. The thing is, it's always all a question of proportion and obviously of the moment in the growth cycle we are. So my table obviously has also the rating shenanigans in there. But even if you don't look at the rating part of it, you see how strong certain companies are. And I actually put the cash flow from operations as a column in there. And you're right, Apple last quarter had 100 billion. You had Microsoft close to 88 billion. You had Alphabet close to 100 billion. And so the free cash flow I'm talking then was 15 billion for Tesla. That is not, ultra impressive. I still don't think there's any need for a capital raise. I mean, they may prove me wrong tomorrow because where it is extremely good is in comparison to their debt. And yes, I know they have taken some short-term debt to offset some of the leases. I think that's actually in preparation of that asset-backed structure that they are working on to put in place. But this is all, small. I know 2 billion is not small change, but small change moving around trying to optimize. This is not because they're running out of money. I mean, I honestly don't see it. And I would be highly surprised that anything in that sense happens. And for me, Tesla is still among the top 3, if not the top 2 of financial strength companies among the mega caps. And of course, way ahead of any other car.
Thanks for breaking that down, Alexandra. Yeah, I think that the cautious approach that Tesla is taking argues against going to the capital markets. I know the old expression, dig the well before you need the water, but they did that in 2019, they were raising capital and they were in debt, and then they got themselves out of debt to prepare for this downturn. And you see now they are taking the position of slowing growth in order to wait for the all clear. I don't think that they're going to do this foolish, we're going to grow no matter what approach. They're clearly managing their, their balance sheet to make sure that they don't get themselves into trouble. And you heard it on the call. In fact, one can argue that they're going too far, being too cautious, where other earnings calls, you're not hearing this kind of level of trepidation.
No, they can do whatever they want. They just don't have to say everything.
You
That's
just
fair.
triggered Jeff again. You keep triggering Jeff.
Totally triggering
Would we ever?
Jeff's on a rampage.
Jeff, tell us what's not right.
a lot of things, but a lot of things are good. There's more good than not
There
good.
we go.
Can I say something about macro?
Absolutely.
Sure.
So I live here in northern Spain, northern west Spain, and macro here is quite a problem because olive oil. And I don't know, you guys might not care about olive oil, but olive oil here went up like from a gallon from 10 bucks to like 20 bucks. And people in Southern Europe cook a lot olive oil. And I think this is quite a thing for me, an indication how bad the macro is, that olive oil is that expensive. That's all what I want to say.
Yeah, I take your point. There's probably some, I don't know the particulars about olive oil, why there might be, that. But inflation overall has been coming down. There are some, things such as you're speaking about that I guess have not corrected back down. But I wouldn't extrapolate that, olive oil being expensive in Europe would be take down like a broader economy, say in the US or, I know Europe is struggling right now and they've got, the war with Ukraine and Russia kind of on their doorstep still going on and they're still tackling with inflation. So I hear your point. I just don't know that the specific olive oil, I don't know how to like incorporate that into the bigger discussion.
So a quick Google search led me to New York Times, and 2 days ago, why is olive oil so expensive? It is due to extreme weather hitting crops in Spain, Italy, and elsewhere.
Yeah. So it'll probably recorrect at some point.
So I'm
But
not
thank
sure
you
that,
for
yeah, thank you for the comment. I think macro is a great discussion. I'm not sure that specifically olive oil ties in, but yeah, perhaps war in the region has something to do with it as well.
I think everybody should get their olive oil from Tallis Creek.
That's the best
California.
sentence of the day. You're right, Jeff. While they still have some, they're soon running out this season, and then we'll have to wait a year again. The
Gonna order
best
five.
olive oil out there, organic and just absolutely beautiful.
There we go. We have an expert.
Hey, you better share what your affiliation.
Oh, I should. So my husband is a founding partner
ding,
in that
ding.
vineyard. Of course, I have to tell that. So he's a founding partner 32 years ago in that vineyard in California. And they planted actually those olive trees right at the beginning. And now been, I don't know, the fourth or the fifth year that they have been able to produce olive oil. And it's absolutely wonderful. And they're selling it on their website. But it's coming to a close. I mean, there's only so much oil per year to be made.
So my olive oil, I'm Italian, so I love dipping bread in olive oil and drinking wine. So that is very good to know.
Right. Red wine or white wine? Tell me.
Red, I love red. Give me a nice either Chianti or Merlot. We're good to go.
There we go. Talking about the real life. Who cares about stock prices, right?
And welcome.
I do believe we should also talk a little bit about the situation about cruise, because I hear so many different voices now on X on this. On the one side, you have the Gary Blacks of this world saying, oh my God, if cruise is now in the hands of the DMV in California, Tesla will have a tough time as well, because once they have a stance against autonomous driving, it's going to be difficult for all. And then I have the other voices saying, well, cruise always had a system that Tesla very early told us wouldn't work, too much interference, too many unknowns in there, and that's why Tesla has a much superior approach, and so we won't run into the same issues. So what's your take on all that?
I'll jump in because I did formulate an opinion earlier today about it. It seemed like when you actually read what the DME said, that it's, they're not saying they're against autonomous cars now. They're just saying that Waymo did the wrong thing, and not only that, so that needs to get fixed, right? And
Cruise.
public safety is the number one concern.
Not Waymo, Cruise. Yeah, Cruise.
My apologies. GM Cruise. That they need to do something about it in order perhaps they can restore it, right? I don't think it says that it's indefinite. And it seems like if you're going to withhold information, then that's a problem. So I don't think that it means that autonomous driving is dead, because ultimately, if the numbers are going to show that it's safer than a human, or the statistics with injuries, people are going to die. I mean, it's just going to happen. But if it's much lower and it saves lives ultimately, isn't there will be some number that society will tolerate, where the systems have to get to the point where it's low enough that you can have almost no deaths or injuries.
Yeah, and real fast, I just want to say, I think it's a little harsher than that. And this is not reflected on Tesla, but I believe the ruling was the car must have a driver now. Any route, anywhere must have a driver. So it is kind of a step back for them. A driver must be sitting in there. Otherwise, they cannot operate at all.
I
So I think that
I
is
thought it was
kind of a,
specific to California. Hold on, I thought it was specific to California.
well, where else are they? I don't think they're much else other than
There's
California.
no, I think they're in Austin, they're in Phoenix.
Okay.
But
But they're
it's a
supposed
San
to go.
Francisco. Yeah, it was a San Francisco city ruling. So yeah, they're not going to be able to rule on crews in other cities. So yeah, this is specific to San Francisco. It's the first city that they've been able to go wide and run around the clock. Remember, they're only running overnight until very recently. So there's pretty serious accusations. I think it needs some time to play out. And we should be clear, like there's accusations. I don't know what's founded, what's true, what's not true about them withholding information. I mean, it's serious things that, it's not only the performance of their product, it's also the way that they're handling issues that there's accusations about. So I think it needs some time to play out. I don't think it's applicable. I think you can, if you're overly negative, you can say whatever you want. Tesla's on a different timetable. They're taking a different approach. And, again, as long as I think you're upfront and you're truthful about your approach and what you're doing, I think the city will work with you. I think they've proven that they'll work with you. So I think there's more going on here than what we know right now. And let's see how it plays out. But yeah, Cruise, I think, is in 4 other cities. Again, not fully deployed, but, in lots of being deployed. And so I'm sure those other cities are going to look at this and like, all right, well, this happened and this is the way Cruise handle it. So yeah, I think you may see back to Tesla. I think it's too early. And again, Tesla's with a driver. There's no scenario right now where you don't have a driver in a Tesla. So,
Excuse me, which actually reassures me, because remember how much heat we're getting from some of these people out there, without naming people that are living in my town, about, this is a fake level 2, whatever. I think that was the smartest move ever from Tesla, to keep this level 2 under the cover of driver is in charge, improving until you're actually to the level where you're going straight away level 5. That Mercedes-Benz approach. I mean, I read this morning an article in the German press saying, they're far ahead. They're the only one level 3 plus, blah, blah, blah. We all know what a fast it is. 40 miles an hour only.
I think Alexandra cut out.
oh, thank goodness, I was about to reboot my router.
Yeah, I think she was saying that the Mercedes level 3, but it's 40 miles per hour only on highways, only in certain weather conditions, only if you're following another car. This is not in any way close to being a robo-taxi, but they claim it is.
Let's get Dan, and I think he's had his hand up for a while. Go ahead, Dan.
Thanks. Yeah, I was speaking to Whole Mars about this last night. And what he pointed out is it's, these edge cases are very hard to, simulate. So it's only when it happens you get an opportunity to then sort of run it back through the simulator, these particular scenarios. But what we sort of, the conclusion I think that, he came to and that I was suggesting is that when these situations do happen, perhaps that's the advantage of an autonomous system, is that you can then use these edge cases and then put them in the simulator. And I think, so like from a regulator's perspective, wouldn't it be quite compelling if you could say, yeah, it happened and there was a mistake, but we have run this through the neural net now, and we can prove that this, in this scenario, this wouldn't happen again.
Yeah, I would know. If I were the regulator, I'd be like, well, how many edge cases are there? Have you modeled? And they're like, well, there's no way for us to know. I actually don't. I think Tesla's approach to me has the opportunity to kind of be the end to end, home run. This whole thing of like, when we encounter an edge case, we throw it in and we deal with it. And I think Tesla will do that too. But I mean, the question is how many, what's the performance of your system and how many edge cases what is an edge case? and what's the tolerance of your system and how many edge cases are you going to experience per day, per week, per month, per year. So I think it's a little bit more complicated than that. But let's see how this plays out. San Francisco is pretty, I would say on the leading edge of technology adoption, as some other cities are too. So let's see how this plays out. But again, one thing I wanted to say about Cruise is just looking at the economics. If GM reported today and Tesla came out with their 10Q, I think this morning or late or yet last night. And if you look, Tesla is saying that deferred revenue over the next 4 quarters, and most of this is that they're going to throw off $850 million, so 0.8 billion in deferred revenue, with most of that being FSD. And Cruise increased their losses per quarter, and they're now running at negative 2.8 billion losses, annualized. So you've got a huge, this is the debate I have with people of like, well, look at Cruise and look at Baidu and look at all these other, I'm like, well, do they have the unit economics, so when they're at scale, it's a profit, is it a business or not? So, I mean, you could take something out of the prototype lab, try to scale it, but if it never economically scales, it just scales in volume, but the economics are not there, it will die. The people can't run a charity business forever. So the economics of these robo taxis are not good. And, there's estimates that some of these cars, remember, these cars are remanufactured, and everybody kind of like tosses that out. It won't matter when, once it's a robo taxi, it'll break even. Like, how many years will it break even if these are $1,000 once they're remanufactured or more? So anyway, it's not clear to me, like, we don't even know the efficiency of these cars either. How often have they charged? What's the onboard compute? We know the onboard compute of a Tesla. It's basically, equivalent of a light bulb. And we know the cost structure of what's in a Tesla today. It's, estimates are in the $1,200 to $1,500 range for the computer and the optics and all the wiring, to them. So, and if you look at, even some of these cars that are not remanufactured, like some of the Chinese cars where they're equipping them with LiDAR out of the factory, but they necessarily don't have their software going. Companies like Li Auto are saying they're up closer to $5,000 per car. So they're kind of looking at the Tesla solution and kind of like, this is fairly significant opportunity. If anybody can, find $3,000 of cons to take out of a car, it's gigantic. So anyway, I think the economics beyond this suspension of, okay, a flag was thrown on them. Yeah, it was not clear to me, like, when would the economics actually work? What would the cost per ride have to be? What do they need to do with their fixed cost structure? And when does it break even? And then when does it actually start throwing out cash?
Never.
That's what it looks like.
So I want to make a point. I had this conversation earlier with a few people that if you are trying to figure out what's the likelihood that Tesla's going to get to robotaxi, okay, I believe that you cannot use Cruise at all. That's pretty obvious. I think many of us on this call will agree. You can't use Cruise to tell you what's the likelihood Tesla's going to get. You also cannot look at the past 5 years that Tesla's been saying they're going to achieve robotaxi. You can't look backwards and see how long it's taken it. That's not that means it might take much longer to get there as well. You have to remind yourself that version 12 is a very different animal than version 11 or any other version that Tesla's ever made in the past. In the same way, I also personally believe you can't look at version 11.4 or whatever and say, hey, look at this advancement. Therefore, we're going to get closer and closer to robotaxi. Version 12 is 98% code that was created by the AI. Okay. They got rid of 300,000 lines of code that they used to have with all the different neural nets that, the software programmers developed for version 11 and below. This is a completely new animal. And so you should not be looking backwards. You should be taking a look at this new system and trying to evaluate how effective this might be. And we're going to learn more about it. But, I just want to, people can't be looking at the Cruise or even our current version or the past 5 years. This is a whole new scenario that we're at.
Exactly. I think that point is so important, and the reason why most of us aren't dumping our shares and running for the hills with a little bit of with our tail tucked between our legs. And it's this part, right? Like we have FSD, but you see what it's doing well. Go back 5 years and just think about it. We have a computer that's able to use cameras to drive around. That's fascinating. Anyone who grew up with DOS computers And look at what we have now. Everyone has a smartphone, and we're seeing the birth of computers able to make their own code and govern themselves. What are we talking about here? It's wild. And really, if you think about it, it's so simple. I think, Herbert, your point about looking back and complaining that it took 5 years to get to the point where, or more, what is it? Well, whatever year they started with FSD, but it wasn't FSD before, right? It was just autopilot, and it was very basic, and it was very coded. But now you have the ability to process so much video data to learn from humans and then to make decisions on its own. It's wild.
Okay.
And by the way, I have zero doubt that they will solve it completely.
Okay, good. I think we're going to close down the space. Thank you, everybody, for joining. Please follow all the speakers. Follow Cyberbulls One. Appreciate you guys. We'll do this every Tuesday.
Did Dan get to go? I don't think Dan got to say what he was going to say.
Oh,
Yeah,
well,
go.
I just, sorry, yeah, just one more
You
thing.
did.
I know you got to go, but so in 2021, 6 million car accidents, okay, and 39,000 were fatal, involving 43,000 people. So yeah, just getting back to that point, if every single car on the road was a Tesla, how many years would it take to solve pretty much every corner case? So yeah, like you're saying, but version 12, where it's basically just all neural net. And so we don't actually even know exactly how it's making the decisions it's making. But yeah, so doesn't that give you hope that like those accidents, because it's humans and we're all kind of limited by the scale of our neural net, that's not really going to decrease for humanity. But when you consider that, potentially Tesla could be driving all of those miles, surely we should have faith in a supercomputer and a neural net that will be able to reduce those deaths ultimately.
All right, good. Thank you, everybody. Follow us. Sorry. Thanks, everybody. We'll see you next Tuesday. Bye.